Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Matt Battiali, editor of the New Energy newsletter, published under the Mangrove Investor. Now, we've been bringing Matt on more regularly to focus on this move, this shift more into green energy and critical minerals, just because, look, there's still a lot of news that's coming out and a lot of companies that are still, in a way, pivoting or starting to focus a bit more on some of these critical minerals. Now, Matt, we have a couple pretty important stories, I think, to touch on here. We're going to start in the lithium sector and recent comments out of the Chilean government. Now, I've read over what the government had to say, and it's in a tone or in a way they're talking about potentially nationalizing assets, but in a way, they're also saying that they are open to some outside investment. Now, I've read what the government's had to say, and I've read what a lot of companies that are active in Chile have had to say. And as you would expect, they're all spinning it in the way that makes it sound like it is more of an open season for explorers, even for potential miners in Chile. Matt, give us your breakdown on what the government had to say and the direction you think they are moving when it comes to lithium assets.
Well, Corey, Shad, thanks very much for having me again. Yeah, this was a big deal. And it seems that the specter of nationalization does pop up every time a mined commodity gets expensive. You either see windfall taxes or you see the nationalization. And particularly in South America, when we start talking about nationalization, investors get really twitchy because, Venezuela was notorious, but they were outright stealing assets. And that's not really what was being proposed here. This is a proposal by the government to have a position in all of the lithium projects. My suspicion is that the reaction by the market is overdone. If you look at Albemarle, the shares are under $180 a piece now. That's down from a high of over $320 a share as recently as November of 2022. Same thing with SQM, which is another major producer there. Shares have fallen substantially off of their high. I'm a buyer here. We need lithium. I think that there was an overreaction, and I think that what you'll see is that the government can't get too heavy-handed here because you'll see companies go elsewhere. Lithium is not specific to one place. There's lots of lithium around. If you stifle lithium development in one area and the economics continue to work, you're going to see it pop up in other places. We've already seen that with the hard rock lithium developments in places like Canada.
Well, Matt, another takeaway I got from this story in Chile is that a lot of the automakers immediately reacted by saying, wow, I don't think I'm going to want to source my lithium from Chile now. And so several car companies came out and said, we're going to focus on Nevada. We're going to focus on Argentina. We're going to focus on maybe Bolivia. So it's actually turned away some of the end users that would be buying the lithium from Chile. So how do you think that ties into it when manufacturers kind of push their weight around and say, hey, we want more of a diversified supply chain now?
Well, I think it will encourage development outside of Chile, but at the same time, these guys have to have lithium batteries to make their product. And so we have these words, but I don't believe in the long term that it's going to be much more than that. If you've got to supply lithium from somewhere, you're going to take it from where you get it. But I think because of the outcry, mining is a business. And the Chilean government doesn't want to get into the lithium business and then have it go away. They're going to need to act as I'm not even sure what their role will be, whether they just want to be in there to take a piece of it and they'll act more like a tax, or if they want to go in and make sure that the lithium projects are developed in a certain way, which would slow down development, maybe make it more expensive. But in the long term, I think you had a strong reaction from investors and, as you said, from industry. And I still see lithium as a good place to be for investors right now.
So, Matt, if you think this is a buying opportunity, are you simply moving into the larger miners like SQM, or are you interested in some of these area plays, some of these, in a way, almost prospect generators or simply explorers in Chile?
Yeah, I'm more interested in the big producers in Chile, right? So I like SQM, I like Albemarle. I particularly like Albemarle. They've just been, that stock's been so beaten down. Um, you know, I'm looking at, when I'm looking at development and exploration, I'm looking at other places. I'm looking, I love brines. I mean, I really, we were talking about that prior to when we started. When you have these basins, one of the reasons why Chile is has so much of this stuff is because you have mountain ranges that popped up and they get a lot of rain and it weathers these granites. And so you get these basins full of salts, and it's potassium salt, it's lithium salt, it's sodium salt, right? And then they laminate in these basins. You have a little bit of a density change, and so that mining technology is really well understood. It's been around a really long time, and so the engineering of it should be relatively straightforward. So you don't have a lot of the same risk as you would have in other types of mining. You don't have to create anything new. You don't have to get any fancy equipment. It's pretty straightforward. I mean, we've been mining potassium this way for fertilizer all over the place forever. But there are interior basins like the American Midwest, like the Great Salt Lake is a great example. The Great Salt Lake is a basin that doesn't drain. It's full of salts from the mountains that have decayed into it. So those are the sorts of projects that I'm looking for. And you have multiple commodities that can come out of these things, like potassium and like sodium. So yeah, that's kind of where I am. But I like the big guys the best.
Well, Matt, just one other article that I saw relating to this. They're calling it the Chileanization of the lithium sector. And they're using a model that the country says is using a model that echoes to the past when they did this with copper. And we were talking before the call about Codelco, which actually was formed when Chile, and I think in the late 60s, early 70s, nationalized copper in the same way. And that's when they formed Codelco. And so their argument is just that they can still supply the marketplace, but do it better as a government. What are your thoughts on that? Is it better when governments are running? Because we see that sometimes with Japanese conglomerates, sometimes with Chinese conglomerates, where they'll come in and as a nation run the mining business. Or do you think that it's better when private companies do it, that sometimes they do good and sometimes they fall on their face? What's your thoughts there as far as governments supplying these minerals versus private companies doing it?
Yeah, I'm never a fan of government operations. That's my experience. If you have the government in control of it, it's typically inefficient. It's not being run as a business. So yeah, businesses do fail, but I would put the track record of private of company run mines ahead of government run mines any day in terms of efficiency and productivity. I've run into the Japanese investment group JOGMEC over the years around the world. I mean, I was in New Guinea, and JOGMEC was a quasi-government entity, and they were out looking at it was an oil and gas project in the jungles of New Guinea, and so we went to see the production. They did a flow test for us, and we all flew back to Port Moresby that night. That was more of an investment. So they were there to acquire that commodity stream for the industry in Japan, I believe. I don't think that was going to be owned by the government, but that was the government investing in that. And I like that idea. I mean, look, if you have a strategic need for a commodity for your economy, the government should be out there helping businesses acquire it and helping businesses produce it. I think that's I don't have a problem with that. Although I know I have friends who, when they hear this, they're going to be like, "Oh, Matt, you socialist." But strategic needs, kind of come first in my head. But yeah, no, I'm not a fan of nationalizing. I mean, you just look at Mexico's disaster when they nationalized their oil industry. Venezuela too. That's really the examples that I think of immediately. And Mexico actually broke their oil field, which is possible. You can break a reservoir. You can mess up a reservoir by not producing it correctly. And they just didn't have the technical expertise to do it right. That's the thing in my mind about private industry versus the government, is that private industry always has they have the better scientists, they have the better engineers, and they're always looking to do things the most efficiently, which is why they're always going to be better than a government entity.
So, Matt, one thing that you were outlining when you sent out that Codelco update to your subscribers was the fact that, look, Codelco is producing a lot less copper than they were back in 2005. It doesn't look like they're even going to recover to any of their old historic production levels. And you tied that into more of the copper sector by saying, look, a lot of these giant copper producers and these large projects, they're old. And as projects get older, grade usually goes down, environmental liabilities sometimes even go up. It just further points to this potential supply-demand imbalance that we have. Take us through how you think Codelco is just the start of a bigger story here for copper production.
Yeah, it was a follow-on to a theme that I've had, which is that, the demand numbers are pretty obvious when it comes to copper. We're going to need a lot more. We're going to need a lot more. Where is it going to come from? And you look at the 20 largest copper mines, and a lot of them are in Chile, and their average age from when they were first discovered to today is 64 years. So the top 20 copper mines in the world are boomers, and some of them are really, really old. So if you look at, let's take, for example, El Teniente in Chile, right? That went into production in 1819. So this thing was discovered 200 years ago. It's been producing for forever. And as it produces, it produced the highest grades first, and then it's moved into lower and lower and lower grades. Chuquicamata is another one in Chile. First production was in 1915. So these are still in the top 20 global copper producing mines, but they're really, really old. And so, yeah, when Codelco blew everyone's mind, they did their 2022 annual report, and they were 172,000 tons light. That, it was down 10% from 2021. Put that in perspective, that's roughly the same amount of copper as Anglo produces in a quarter. So that's a big hit. It's a really to the global copper supply. And we can't afford to be going backwards. We can't afford to have the world's largest copper producer producing less copper. Or if that happens, and which, well, obviously it is happening, then you have to go back to the copper forecasts and start leaning toward the worst case scenario instead of the best case scenario. And in the worst case scenario, copper prices are going to be ripping here in the next couple of years. That was my point with that essay to my readers, was we need to actually kind of step on the gas a little bit in putting our copper portfolio together, because it's very likely that copper prices move higher faster than we expect.
Well, Matt, to that point, when the price of copper does start moving, if we saw a 5-handle or even a 6-handle on copper in a year or two, there's a lot of companies that are decades away from being ready to put it into production. There are some that are further along. Which companies are you positioning in your portfolio to take advantage of potentially higher copper prices?
Yeah, that's a great question. I actually, I've got to start doing more research. I mean, I am focused on some development plays. To take a step back, one of the problems that I have with the copper space right now, and particularly those mines in the top 20, is the fact that they're old. We talked about this a little bit before. Like, there's a liability and there's a significant risk that comes with buying legacy producers, because these old mines, their tailings dams are at risk, as we saw with Vale. They weren't copper mines, they were iron mines, but the tailings dams weren't built up to spec, and they never spent the money to fix them. And so it cost them billions of dollars when they failed, and it was more than one that failed. And so when you buy these really old copper mines, with these legacy producers, you have that risk, and it's a real material risk that people, I think, under report. They don't really take that into calculation when they're doing their risk to reward. So in my portfolio, we bought a copper developer called Capstone, which I really like. They're developing their copper project. This is one that it's kind of what I consider to be new in the new mining category, simply because they're the way they're developing this, they have the community on side. They're doing everything right, in my opinion. So I'm a big fan of these guys, Capstone. And then I'm looking at a couple of exploration companies, early stage development. One of them that I can tell you I really like is a company called Adventus Mining Corporation. So, these guys are down in Ecuador, very interesting management team. I was there actually when this thing was born. It started out, they were looking for zinc in Ireland, and this copper opportunity came by, and they pivoted. I'm a big fan of Christian Cargill-Simard. He's the CEO, and it comes out of the Altius group of companies. So they're, if you have the stamp of approval from Altius, you're a leg up in my book anyway. So.
All right. Well, Matt. Nope. All right. Well, Matt, thanks for breaking down some of these, I think, more important stories for both the lithium and copper space. That lithium story out of Chile, though, we're going to see how the government deals with everything and just how much further maybe some of these share prices drop, or if it truly is just a short-term pullback. As for copper, man, oh man, we've been hearing so much about this supply deficit coming in the near term, very near term, but it just doesn't seem to have pushed price to some of these levels that I think people are thinking, but hey, maybe it will. Matt, thank you as always for your time. I will post a link to the Mangrove Investor website. I recommend you guys signing up, keeping up to date with Matt and what he's writing about when it comes to critical minerals. Matt, thank you again for your time. We'll chat again in another couple weeks.
Thanks, Corey. Thanks, Chad.